Hi Andy.
Hi, Brian.
Thank you for talking to LAPF Investments on behalf of Infracapital. Can you tell me a little bit about what you do?
So yes, Infracapital is the equity arm of M&G Investments. And my background, spent 10 years in the construction industry, so really understand the infrastructure sector. And for the last 16 years, I've been a utilities and fund manager focused on infrastructure.
I guess the first question I could ask is, what exactly is infrastructure?
I see infrastructure as being sort of the core requirements of the country. So utilities, energy, both renewable energy but also traditional energy products, transmission, distribution, transport in a more traditional sense. People look at road and rail and airports. Airports can become a very investable sector. And more developing areas, telecommunications, so mobile tower masts and communication backgrounds and data centres. And then for more sort of social infrastructure, and we saw the developments in the mid-80s of the PPP model, where we've developed and delivered private investment in social services as well, like hospitals and schools and other sort of facilities that the government provided. And I think within that class it's starting to subdivide itself as well. So we see Greenfield and Brownfield being two definitions that are regularly kicked around the market, and I think investors sometimes get a little bit confused on what those definitions are. So Brownfield are essentially operation assets, mainly with an incumbent management team, offering long-term yield to investors. With some growth story in there, but really traditionally essential assets. So again, the airports, the rails, utility companies, both the water or power producers. Where Greenfield infrastructure is more about the building of new assets. And we're seeing a big demand in the country now for new Greenfield assets, both in the UK and across the broader sort of global strategies. So Greenfield's about building something new, be it a power station or motorway or a hospital, that needs to be developed, designed, constructed and then delivered, so that it ultimately becomes a brownfield long-term asset that produces the yield we're all looking for. It also can produce some capital return as well, because in the greenfield stage you're taking that delivery risk. So therefore, out of the greenfield asset, you can also get capital appreciation as well as yield. And as that's developed, I think we've seen some further strategies in terms of more growth strategies as well. So we've seen infrastructure, core and core plus terminology being discussed. And I think you can then get sort of essential brownfield assets. And then the core plus model is more value add and growth as well.
There's been a fair bit of interest in the local authority sector in infrastructure. Mm-hmm. What do you feel are the particular advantages?
I think that for local authority pension schemes, I think what we're looking at is the long term. So in infrastructure assets, so when I define what infrastructure is about, I'm looking for a very long investment horizon. That helps the pension funds invest and match their liabilities. It has a very strong market position, so it's less susceptible to major movements in the equity markets. And infrastructure, because of its monopoly, because of its essentiality, produces a stable return that you can build a portfolio around. I think the low volatility is very important that we identify, is that it doesn't have short-term massive changes as we've seen in the stock market recently. And therefore I anticipate most of the infrastructure assets that we're invested in will come through this high volatility period and continue to deliver those yields and those steady growths. And it enables you to build a strategy around that. So I think when you're looking long-term, and we, as a pension fund, you need to plan your future. You need to plan what your liabilities look like. You need to find some correlation to inflation to match your liabilities.
We've recently had a vote on the UK's membership of the EU. What impact do you think that may have on infrastructure investment?
So it's very hard to be specific about what the impact it will be on, because infrastructure assets are very specific to themselves. As a fund manager like ourselves, we look at diversification is very important, so you don't have all your investment in one particular asset and you create a diversified asset pool. And then I'm confident that infrastructure will play its part in getting through this short-term volatility. Will continue to deliver the sort of returns that the pension fund should be looking for in the longer term anyway. And I think it's got an essential part, and may even now become a stronger element of people's investment strategy, is to remove some of that short-term volatility and look for the long term.
I see. Well, what do you feel the current market opportunities are for infrastructure?
So I think there's a continued demand for infrastructure. So I think we've seen a lot in the utility sector. But I think also there's a drive now to try and find some value add outside the brownfield market as that cost of capital continues to go down because of the oversupply of funding. So we started looking at strategies which include looking at the Greenfield element. So we've been really focusing on trying to develop a very specific model of funding the development of new infrastructure. And this is responding to the government's demand that the pension funds help to support the Greenfield development, because it's essential to the economy, essential to jobs. So we're very focused on trying to find that opportunity where we can enter the cycle of development, where we're not taking development risk, but we are trying to fund the construction risk delivery to produce a higher return ultimately for the investor. I think manager selection, therefore, is important. If you're getting outside of the core brownfield space where you can invest directly, it's very important for the pension funds, I think, to think about how they work with a manager or an expert to access those markets.
I see. Okay, Andy, well, thank you very much for that.
Thank you very much indeed, Aaron. Thank you.